90% of insider stock trades are totally useless, but a handful of them can be super high signal and help us outperform. We had about 81 new insider trades come in, so let's go take a look at them. Now, 81 is obviously pretty low, as you can see here in the number of purchases and total trades chart here. We're getting real low in the total number of trades. That's because we're entering earnings season. So we're going to sit well under 100 here in terms of Form 4 filings coming in every day for probably the next 3-ish weeks, and then we'll see it ramp up again as we exit earnings season. But going to be pretty low, so far fewer insider trades. Insiders aren't allowed to make scheduled or unscheduled, transactions during this time, or at least they're not supposed to leading up into earnings. Obviously, sometimes they do, and when they do, it's super high signal. But most of the trades now are going to be scheduled way in advance, so they're less interesting. So we got to pay attention and really try to find some of those high signal trades. We'll also see, we actually had, in terms of the percent of trades that were buys, we're actually getting a little closer to the median here versus the last few days where we were really low, but we're going to actually sit low. You'll see dips in the months. You can kind of see a bunch of dips, and these lows tend to correlate with earnings season, as again, they can't make unscheduled buys, but they can make scheduled trades, and most of the time scheduled trades are sales. So we tend to see during earnings, not only do we see fewer trades, but we'll also see fewer buys, so a higher percentage of sells. So seeing, below the median line in terms of the percent of trades that are buys is not going to be anything to be too concerned about. So overall, as we mentioned, slightly below the line here, very low trades, but let's go take a look and see if we can find anything interesting. So we'll head over to CEOWatcher.com. We'll take a look at the purchases first. Let's get after the most recent day here, get purchases, and we will sort by transaction value, and we're going to see very few purchases, as we can see, only about 13, which is, nothing. Now, right off the bat though, they're actually relatively decent size. You don't tend to see a ton of you don't tend to see a very many over $1 million purchases each day, so in the open market like this. So we're taking a look here, and we can see first right off the bat, NextDecade. This is one that we've looked at quite a few times, so I won't spend too much time here. You can go watch some previous videos about it, but basically you're seeing all this insider buying right here that happened just after this stock dip, and that would be because the stock dip due to some analyst downgrades. Looks like the market basically absorbed that analyst information and agreed with them, sent the stock down over 30%. Now we're seeing all sorts of buying, $16 million in buys from 5 different insiders, including we've got the CEO in here, we've got some other executives, we got some directors, some 10% owners, kind of across the board, just a bunch of insiders buying the stock here. So a very, very interesting situation. I think pretty high signal purchases here, as analyst downgrade sent the stock down, and now you've got the executives buying up the stock there, along with they just recently greenlit their new LNG development. So all very, very interesting right there. Moving on to Pattern Group, this is just pretty immediately not interesting because it's related to an IPO here. They announced the closing of initial public offering. People are buying and selling for a variety of reasons during the IPOs there, so just not very interesting at all. Moving on to Prospect Capital Corp, another one don't tend to be super interested in these kind of capital companies, and as we can see over this insider, he's been buying quite a bit over the last 2 years, and it's gone so poorly in terms of timing. The stock just continuing to die here, down 40% over the last year. Just not an interesting stock at all, in my opinion. And this insider buying, I think, just looking at his history, I just don't see how that could possibly be high signal. Now taking a look at Marpai or however they want to pronounce it. We got a really small cap company here trading at about $1. We can see historically speaking, while this guy seems to have decent, at least short-term returns, 1 month and 3 month on buys, I think, a lot of that is just due to, a real good dip buy down here, pretty decent buy here, an okay buy here. But overall, you can see, only 50% of the after 1 month is the stock up, only about 30% after 3 months. So over the long term, the stock, over the long term, his purchases have not been very good. As you can see, a bunch of, maybe in the very short term, the stock went from $3 up to 4 or 5. So again, maybe worked out in the short term, maybe some very short term stuff here, but longer term hasn't been good. Now, the only thing that would maybe make this, a couple things that'll make this interesting is one, first let's, check to make sure there's nothing going on here. Held by Hillcower Investment Corp. So it's just, which he is the main owner of. So we've got the CEO buying $1 million. Looks all pretty normal there. We can then take a look. Well, I guess we'll just quickly see if anybody else is buying the stock right now. Doesn't look like it. Just him buying it. If we take a look at this exact time, basically a year ago, was when he made this purchase here right around September 3rd. Bought for 60 cents. The stock was up 100% in the next 2 months. And that was because this is when their earnings were. So he bought previously in last September, he bought the stock right before, not really right before earnings, but about 2 months before earnings. Now he's buying the stock about 6 weeks before earnings. And again, this stock, we can see earnings is coming up here. Let's see right here. We've got earnings on the 13th, which was about the same time back here. You can see that the stock was way down at like 37, 40 cents ish on November 9th, and then popped way up to $1.20 after, in about the week after earnings. Earnings was somewhere right around here, November 13th. Yeah, right in this region, or November 11th, I think it was that year. So, and then the stock went on a bit of a tear there. But, you know, the other thing to notice here is the stock did go down from when he purchased in that September timeframe. I mean, remember, he purchased for 60 cents. I mean, the stock was down like 30 something percent in that next month before it did that pop. But I do think, just historically looking at only that, it's a $21 million market cap, meaning he bought 5% of the company, which is obviously a pretty massive purchase. It's not gonna, there's really no other info for us to get here because it's trading OTC. So, well, actually, I guess they do have their earnings call up, but I believe, yeah, it's a pink sheet stock. So there's just not going to be all that much news out there. Let's take a look quickly to see if there is anything here. Operating expenses cut 70% as turnaround gains traction is kind of interesting. Operating expenses, operating loss down, net loss down, net loss down, revenues also down. We believe our turnaround is real and accelerating. In just 1 year, we have significantly strengthened our financial position by cutting costs, blah, blah, blah. We estimate we're on track to deliver profitability in Q1 of 2026. So this is actually, net revenues were down a little bit due to transitional impacts. They're on cost control and operational operational discipline, which will result in a leaner, stronger platform. So this is actually maybe even a little more interesting. When I first saw this, I thought this is really only interesting as a play for earnings, essentially. You know, I meant to buy, I actually was going to buy the stock right at open today, but I kind of forgot, so I'll probably buy right after this video. But what did it open at? Well, it looks like we'll be fine. Opened at about 115, so I don't think the price is any different now. But so actually a bit of a turnaround play, and you know, just slightly hanging out around the 200-day here, bouncing off of it maybe, which could be a positive sign for momentum. Originally was just going to play this as kind of an earnings bounce again. You know, he's 2/3 of the way most likely through the quarter, so he should have a decent idea of what the quarter is going to look at. We, you know, have a turnaround going on here. Seems pretty bullish about the turnaround progress there, which, you know, could make it actually a little bit of a longer term play, which originally would not have been something that I was very interested in. Let's look at some estimates going forward, kind of all over the place there. If we look at, I actually don't care about this one. If we look at some margins here, we can see, I mean, he's not wrong. You know, you can start to see they're still not very looking all that good, but you can start to see them heading in the right direction here. The EBITDA margin's moving in the right direction. Net income margin moving in the right direction. As he mentioned, it doesn't look like some growth stuff. Yeah, revenues off a cliff. Valuation numbers, I don't know if we're really going to get anything very, very interesting here, actually. You know, trading a little right around kind of the median, but they're all over the place. So for the most part here, what we're really looking at is, you know, maybe a longer term. In the short term, we've got that earnings coming up, which I think is interesting. But then in the long term, I mean, the CEO buying 5% of the company, you know, and talking about a longer term turnaround would make this a fairly interesting, pretty high signal for you in even longer term play, in my opinion. And then secondly, what I would probably do next, the next move, if you decide to play this longer than just for like an earnings pop, would be to go take a look at some of these previous earnings calls. I'd be interested to see what he says right after this one, this Q3 one last year, when we saw that big pop, what caused it to pop then, and then maybe to see, okay, well then why did it fall kind of back off I guess it didn't fall off a cliff, but it flattened out here. So I'd be interested to know actually the quarter before leading into it. I would want to know, like, why was the stock falling from what happened in this quarter, you know, that caused this massive drop, and then, you know, languished here before then popping and basically being flat now, since previous quarter. So I'd probably read those 5 or 6 earnings calls. It'd probably be pretty quick, as I'm sure they don't have many analysts asking questions, just to get a sense of like, okay, does the CEO always say that they're doing this turnaround, or has he been saying this turnaround's in progress since all the way back here? Or did they kind of announce like, hey, things are not looking good, which caused it to crash, and now they're like, all right, we're starting to figure stuff out, where obviously now it's been starting to trend in the right direction. So overall, I think, well, now the stock's up literally since we've been talking about it, already up another 15% or whatever. So that's why I should buy the stock when I first come across it and not wait this long. But I still think even at this number, it's a pretty interesting play. Moving on, we've got Worthington Industries, another interesting one to look at. The rest of these, nothing else I'm much seeing interesting here, but I do think Worthington Enterprises is moderately interesting. It's kind of a tough industry. Let's first just go take a look at, we can see we've got a couple of buys at 2.4K, just we can just ignore that. It's not even a real purchase really. But we can see a little bit of a stock dip, which looks like it's going to be, yep, because of some earnings. So must have had poor earnings, which we want to go see what that's about to get this about probably 10%-ish dip or whatever that might be, 20% I guess. 20% dip. We got a director buying the stock. That's the wrong guy. Take a look. It doesn't look like, I mean, very little trading by any insiders here. Nothing since a pretty well-timed buy back here by Joseph Hayek. Some very well-timed sales back here about, almost a year and a half, a little over a year and a half ago, but very, very little trading recently. So let's go take a look just at this guy's history. We can see about 6 or so trades there. And if we just look at his, it looks like he timed the sells pretty well here. I mean, it didn't go down a ton, but I mean, went down 20% or something over the next, whatever that is, year or so. Timed the sell very well up here, March 2024 at 63. Stock was down at 40 by the end of the year. A okay time sale here. This certainly didn't beat the market in 2018, but the stock didn't go down at least. So now we're seeing a dip buy over here is moderately interesting. It is a pretty small, relatively speaking. These two sales that he nailed the timing on were much larger, but overall still pretty interesting. He has a track record of pretty good returns, a sizable purchase, 11% of holdings, first purchase in a long time, flipping from selling to buying. All of those things are pretty interesting. Now let's go take a look at the company itself, see if we can find what's going on there. Overall, EPS kind of in the near term, at least trending in the right direction. The stock market the stock has been trending with it. However, we do start to see a divergence here with the dip after earnings, even though EPS has been, went up a little bit, the estimated earnings per share actually. So if we go take a look at maybe why, you might be able to see why the earnings were down. If we press release will be a little faster. Sales were up, net earnings were up. So those are, up quite a bit. EPS looks like it was up 48 to 70. Operating cash flow flat. So now we're kind of getting, while free cash flow decreased. And so now we kind of get into what some of the problems were. It looks like they repurchased some shares, declared a quarterly dividend. So those two things, could be kind of bullish. Wired a manufacturer, but it looks like some costs are probably up, which if we see, maybe they'll tell us in here. So we can see that right to left is always a weird one, but we can see the earnings and stuff going in the right direction. However, it does look like they must have, see if they'll tell us net sales. We already told us all this stuff. They tell us why we have a strong start. Maybe they'll tell us somewhere else. It doesn't look like, but something is clearly going on because their revenue and stuff is going in the right direction, but their cash flow margins, let's see, margins were impacted by a purchase accounting charge. So margins went down a smidge. Adjusted EBITDA margins were fine. EPS was fine. Capital expenditures include significant spend on facility modernization, 35 million remaining. So they're going to keep spending for 3 more quarters. It looks like they're going to have to, if they're spending 13 every quarter, they have 35 million left. You're going to have 3 more quarters of the CapEx on there, which interest rate, liquidity, net debt, don't care. Share repurchases. Looks like they repurchased a little bit lower of a number of shares over the last quarter. They're not really telling us where exactly. Margins were down in the consumer product margin. So here's a big downside, which now you have the tariff concerns coming in, margin pressures from tariffs. So this seems to be a little bit, they've got some CapEx spend, which is obviously costing them some money. It looks like maybe some tariff concerns as well would probably be why these tailed off, which I think if we I had just recently asked Google Finance and they're basically softer cash flow. So there was the decline in cash flow as we mentioned. So obviously even though revenue and stuff's coming in, there's obviously a bunch of costs and expenses, which obviously higher expenses here due to the acquisition, due to that's not telling you anything. Weakness in the consumer product segment. So this is where we saw some margin issues due to both tariffs and then also a product mix as they mentioned. So increased expenses from acquisitions and the facility upgrade. So yeah, mostly seems to be tariff concerns and then just overall cost concerns, which as we saw then, costs aren't going away, at least CapEx cost. I mean, tariff concerns aren't going away anytime soon. And then CapEx costs, wherever that was up here, the $13 million, you got another few quarters of CapEx costs. So overall then, I guess we could take a quick look just to see if we can get what do they look like historically? Maybe a little pricey, maybe a little bit on the slightly higher end, though the price has been, the multiple's been coming down a little bit. So, probably fairly valued historically speaking, or about average to where they're at. And then I just think there's probably a little more. I think the insider purchase is pretty interesting. It's a pretty high signal. This guy tends to time the timing pretty well. I do think though, probably not the most interesting. The story is not the most interesting, I think is kind of the problem here, which is just, rising costs that are going to be an issue for a little bit. And you always have that whole tariff overhang is just always pretty frustrating. Plus then on the consumer product growth with the margins coming down too, you also have to worry about just a weakening consumer going forward as well. So overall, I don't think the story is quite as strong here, even though the purchase itself is quite interesting and quite compelling. So probably, yeah, I think the Marpai and the Next are definitely the more interesting purchases out of those, though, pretty good chance Worthington works out. But if the Worthington works out, you'd be very much just betting, essentially, you're basically just betting on this guy being totally correct, which historically has been all right, but a harder bet when you can't put a story around it. Let's now switch over to sales here and see what we've got. More selling at CoreWeave. This has just been kind of ongoing from their IPO. Some 10b5-1 selling at Broadcom, which we've now seen quite a bit of because Hawk Tan has also been selling. So quite a bit of selling up there. NuScale PowerCore we already saw before because now this person has now sold another 90 million. So they're up to 390 million at NuScale Power. Very popular company, very popular industry, obviously, as power and energy is going to be wildly important as all these AI data center infrastructure is getting built up. But stock is kind of turning over a little bit, as we can see. But, and it's been pretty flat now for quite a while, for most of 2025, which is kind of interesting, even though it's up still a ton over the last 6 months and then obviously 200% in the last year. Trying to time those high momentum, very popular stocks really hard, but interesting to see some big selling there. This person, quite a bit of selling recently and has been just sort of nailing it as the stocks continue to fall. My hunch is this is a pretty small cap stock though, that I don't know how much you're really, $22 million stock. I don't really know. It's too small to try to short or anything. I mean, you could, I guess, but it's going to be a tough one. I would assume if you could find any shares. So I'm not even going to really spend any time on it. This is going to be couple 10% owners here. Not super interesting. At Blackstone, we've got somebody, a director here. Historically speaking, just terrible timing, so not very interesting. AutoZone gets pretty interesting because we did see not too long ago, well, here we got the controller selling the stock. Terrible timing on previous sales. So that would not be super interesting. The only reason this is kind of interesting is because, well, one, sales, but we had this huge by the exec chairman here. Just a massive $100 million sale by the exec chairman who does not sell very often, at least in that size. I mean, he does sell quite a bit on the way up here, but the $100 million sale was his largest or close to his largest. And just if you look at the stock, I mean, the problem with AutoZone, well, not really, I mean, the good thing if you're an owner of AutoZone, the bad thing if you're trying to sell or short AutoZone is that the stock just never goes down. I mean, just one of the nicest lines, basically just bouncing off the 200 forever and all of eternity. Its stock is always going up except for like the COVID dip. But even now it's pretty high momentum, pretty extended above the 200-day. And this is while their earnings estimates are just falling off a cliff. I mean, they're not falling off a cliff, but their earnings estimates going in the wrong direction. Stock does not care at all, continuing to go in the right direction. And then if we even go look at, clicking all the wrong buttons here, if we even go look at like some comparisons here, like valuations, I mean, they're above the highest end that they could be. I don't know. Let's look out. Yeah, I mean, just a wildly, over 20 years, look at this. I mean, a wildly expensive stock. Wildly expensive stock with estimates going down and the stock just continues to run. So I mean, like, good luck if you want to short it. Everything about this would kind of say this stock makes sense as a short, just so overextended. Obviously, tariffs are a huge concern here. Weakening consumers a big concern here. Just insider selling on top of all of that, but one of the stronger stocks in market history just never goes down. So I have zero interest in trying to be the one that properly guesses when it goes down for like the first time ever. Gap is another one where we start to see a little bit of insider selling, which is interesting because so this guy has only he has a couple previous sales here that he's timed very well. Maybe in the very short term here over the next like 2 months didn't time well, but over 3 months and longer, I mean, really and then it gets even better as you go 6 months and 1 year, 16 and 30% returns. Very good returns selling the stock, and then you also have some more insiders selling the stock over here. We saw a few other ones, this William Sidney Fisher and same William Sidney Fisher, who I think is also probably a director. If we take a look, let's see, so director and so both directors, those are very high quality sales there. If we take a look though, earnings heading in the right direction, stock chart, could go either way, I guess. Nothing super interesting there. Earnings estimates have been heading in the right direction though. If we look kind of historically at any valuations numbers, they're actually trading, what do we probably use here? Probably EV EBITDA makes the most sense, which are probably a little low, a little light. If you use EV sales, I guess they're kind of average. So a little light though, nothing with any of this would scream to be a short. So this kind of kills the story that you'd be trying to go for, which is, earnings are heading in the right direction, no noticeable downward momentum. Their earnings, the multiples, the valuation seems, just at first glance at least, obviously doesn't scream overvalued. If anything, maybe slightly undervalued. And then obviously maybe not most concerning, but another thing that would kind of lead me away from selling or shorting the stock would be the momentum they've had in news, essentially, in like advertising. They've been expanding into beauty, which, you know, as far as I know from kind of the word on the street is basically that marketing campaign has gone quite well. People comparing it in terms of just looking at how many views and likes and increases in followers on social media accounts, similar-ish to American Eagle. I have a hard time believing it's going to have the same effect as like Sydney Sweeney's. Just, I mean, I don't pay any attention to this stuff, and I knew about the Sydney Sweeney. I had seen and heard about the Sydney Sweeney stuff significantly more than what's going on with Gap, but that would also kind of have me concerned here. So this is another one where the insider selling signal is pretty strong, but the story around it is not nearly as strong. And I'd be pretty concerned then when you don't have both of those lining up. It makes it a lot riskier, in my opinion, and just not quite as interesting. Now, a stock that's probably a little more interesting would be this General Motors here, because now we're seeing a $9 million or $10 million sale basically by the president here, who last time he sold would have been the end of 2024, where obviously the stock went from 54 down to 44. So, I mean, a pretty big 15% or so dip there for a company of this size. These sales obviously didn't work out too well. So if we look historically, he seems to be a little hit or miss. I mean, time the sales up here quite well. Seems to be about 50-50 in terms of, you know, how well his timing is selling. But you also remember that we saw massive sales by the CEO as well. So now we've got the top two execs here selling pretty big, 10, 50, $2 million, $60 million, all happening kind of, you know, with the stock price up here. Those are all pretty big sales. Let's actually take a look just to see the size of the sale relative to historic. So $10 million would put it in about third, fourth-ish. So on the top end, though, these were all 10b5-1. This one's actually probably a 10b. If we take a look here, they don't mention it down here, but this is a relatively new section where they can just mark the checkbox here. So that is a 10b5-1 sale. So these are scheduled sales, but as I mentioned, I do think, you know, you can glean some insights when if you start to see insiders only turning on 10b5-1 sales when the stock is like way up at its high. It can still be interesting, though obviously it's slightly less interesting than when you just have discretionary, just random sales coming out of nowhere. But same with her, we're going to see a similar, you know, selling up here, not as good in June, selling, you know, didn't quite nail this top as well. But so I guess the insider selling, in this case, actually, the insider selling is less interesting on its own than it was with the previous two that we looked at. However, the story is actually a little more interesting because obviously some tariff concerns, obviously consumer concerns are all potential. You start to see, though, the stock on a bit of a run here. While the EPS estimates have come down or flattened out, the stock has certainly not, you know, it kind of followed the estimates up here, and then it's now going up while the estimates are not going up at all. In that case, you could kind of build a little bit more of a story. You can also start to see, you know, I guess in this case, we'd probably do like a PE multiple, in which case they're not actually all that overvalued, though it has been heading up. So I think this would be one where probably, to me, again, the story here is maybe a little more interesting because you actually have earnings coming down, which obviously in that case, this PE ratio could shoot up pretty quickly if earnings come down and the price, as we've seen, the price is not coming down, the price is going up. You know, if earnings do start to come down, that PE ratio is going to explode and it'll probably need to then come back down to the median. So as of right now, maybe not the most interesting, but this would be one to see if price continues to go up, or more likely the earnings start to fall off a cliff here. There might be a little bit of you might be able to time it properly where you get a little bit of a discrepancy between where we'll see the PE shoot up here somewhere before the stock basically catches up with the story. And at that point, I think it'd be a much more interesting potential short or, you know, just sale. In this case, for all three of these companies, they're probably not ones, especially the Gap could actually be an interesting play if you're pretty bullish on the marketing campaign going on. That could be an interesting earnings play. But these other ones with GM and now I don't even remember what the first one that Carl Icahn selling Southwest Gas is kind of interesting as he times those pretty well. What was the other one that we were looking at? Oh, AutoZone. Yeah, I mean, I'd have no interest in owning AutoZone or GM for sure at these prices. You could find more interesting things. Gap, depending on how you feel about the story, you know, maybe an interesting earnings play, but it does kind of crush the story both ways, seeing that the marketing campaign stuff makes the short side of things a little not as compelling, and then also the insider selling then makes the marketing campaign into earnings play a little less interesting as well. So I guess for the very last thing, let's just actually look at Southwest Gas Holdings here. For Carl Icahn selling $116 million of stock, which he has sold a couple times over the last 2 years. Timed them okay. I mean, the stock's been relatively flat since then. A little more interesting, though, is he did all this buying back here in 2023, in kind of mid 2023 when the stock was way down in the low 50s, and then timed that very well, and now he's starting to trim it off now that we're up here in the high 70s. So pretty good timing historically, and is now selling off is kind of interesting. But you can head over to CEOWatcher.com to look through all these trades for yourself, and don't forget to like and subscribe, and we'll see you next time.